Well, happy Monday to you. I'm Marlon Bowling with you, your tour guide to the ag commodities. Here we are on Independence Day Eve. And yes, indeed, we're going to have a full trading day today. We had an overnight session last night. We'll talk about that in a second. We will not trade tomorrow. This is how it's going to work. So on Independence Day, the markets are all closed. Nothing will happen there. And then there will be no trade tomorrow night either. So that's going to be kind of interesting. And then we'll have a cold open on Wednesday. So that serves to be maybe an explosive day on Wednesday when we come back, because a lot of things can change between now and then. We're only part way through this rough patch here, where we had the USDA reports on Friday, then we had a weekend to contend with. And I want to call on Brian Hoops. He's the president of Midwest Market Solutions. So, all right, we've gotten part way through the rapids here, Brian. We're in the whitewater right now, and we still have a ways to go before we come out here by midweek. We are starting a new month, a new quarter, a new half of the year. We had the reports out on Friday. We had deliveries on July starting on Friday. What else can we throw at the market here today? Anything else to consider here this morning?
Well, there's export inspections this morning, census crush this afternoon, weekly crop progress this afternoon. I don't know that any of those are going to have a major impact on the markets. You know, we saw corn pushed to new lows for this move, lowest since I think February, before it finally rallied following the lead of soybeans. So potentially a double bottom at about 491 on the December corn charts. And we'd be looking for, market to try and move maybe closer to some of these moving averages in a corrective fashion, which would lie between 537 and 550. So the strength is probably going to have to come out of the soy complex. I don't know that there's a lot of farmers that really want to sell this crop right now, but that interest is going to change if prices do move higher and the rains that are forecast to come do materialize. It's expected to be 2 to 3 inch rains across a big portion of some of the dry areas of Iowa and Illinois this weekend. And then the longer term forecast has above normal precip with just kind of normal temperatures. So it's a really nice growing conditions for the month of July is what is forecast right now.
Well, let's review what happened overnight then, shall we? Let's take a look at the big board. Our quotes are provided by bar chart on the corn. And I was explaining a little bit ago to someone, I said that when we opened up Globex last night, I believe corn was maybe a penny higher. I think soybeans were like 2 cents higher when they opened up last night. But then I got up this morning and corn was over 10 higher and beans were over 50 higher. And it's like, wow, what happened while I was sleeping? But anyway, we ended up with the September corn 4 3/4 higher this morning at 493 1/4. So it lost a lot of its momentum. December was 4.5 higher at 499 1/4. So it closed under $5. Soybeans, though, they had some big, strong gains again. August was up 52.5 at 1494 1/2. But it was a dime off of its overnight high. Keep that in mind. November was 39 1/4 higher at 1382 1/2, about 9 cents off of its overnight high. Then you had the wheat market, and in Chicago, you had September 3 lower at 648, 7 cents off of its overnight high. In Kansas City, you had the September contract 4 higher at 804, but that was 7 cents off of its overnight high. Now, in the spring wheat trade in Minneapolis, you had September 3 higher at 820, and that was 6 cents from its overnight high, 13 cents off of its overnight low. Cotton market, how did it do this morning? Well, we had December 88 points higher at 81.25 at last check. I want to go back to this soybean market, and Brian mentioned that seems to be the driver here the last day or so. So 52 cents higher on the August, and Brian, I believe, weren't we like 75 cents higher last Friday? That means over $1.25 in gains. I don't know, Brian, I'm just saying, wasn't it really weird that you had China coming in and buying 2 shiploads of soybeans the night before all these numbers came out? I mean, I'm just saying, it was just, they've been gone for a long time, and suddenly they jump in the market and they saved $1.25 per bushel. I'm just saying, Brian, what do you think about that?
Yeah, pretty coincidental, but they are looking at this probably from a hedging standpoint where they want to get coverage in case something like this would occur. If we see a drought through the summer, or if we see a big bullish acreage number, which we did. In fact, the quarterly stocks number was bullish for corn, for wheat, and for soybeans, but it was that acreage number that really caught the trade attention with the huge gains in the new crop category, and that acreage number is what drove the corn market down on Friday, as I think everybody probably knows by this time frame. So you get the November beans back above $14 in the $14.20 range. That's the highest levels we've been at for this year, representing some contract highs. Those are some opportunities I think producers, they're probably kicking themselves when corn was over $6 for not doing something. You don't want to do the same thing now that you have another chance on soybeans above that $14 mark. At least lock something in with some put options and see how this weather plays out.
Well, I mean, it's just uncanny timing. I mean, man, they are really good, apparently. So anyway, just wanted to mention that. We'll ponder that a little bit, how they knew to jump in there. But anyway, we'll come back in a moment, and we'll take a look at our livestock trade for a Monday when we come back. All right, we're back with you, and we are talking with Brian Hoops of Midwest Market Solutions. Okay, so now the livestock trade has had to absorb quite a bit of data here recently, too. A week ago, we had the cattle on feed report, and we had the cold storage numbers. Last Thursday, we had the quarterly hogs and pigs report. Now we have the grain markets really jumpy right now. Of course, the cattle producers are going to be focused on the corn. Hogs may be more on the soybean trade, but what are the livestock traders going to be looking at here today?
Well, certainly the cash markets for the cattle are going to be on the forefront of direction that we provide. The cash markets were down just a little bit last week in the Southern Plains. The futures were higher, so we've really narrowed the spread between the cash and the futures. And additional gains to that futures market is probably going to be dependent upon what happens with the cash trade this week. Now, packers have a holiday shortened kill week this week, but they're buying for next week, and that's going to be a full kill week. And so we would expect cash to be fully steady, if not $1 higher this week. We could see additional gains in the cattle, in the live cattle. The feeders may take a little bit of a breather here. They were kind of on a tear last week, over $9 gains in the weekly closes. They could set back just a little bit with corn trying to move higher, but I think we're going to be pretty well supported on ideas that the packers are going to be looking for some cattle this week. The last couple of weeks, they've been killing pretty aggressively, around 640,000 head. So that's a pretty decent number of kills each week. So this week will be down, but they are buying for next week already, and that's going to be, I think, a little firmer.
They were kind of on a tear. Yeah, they were getting right with the program last week. $9 higher, and they did it without a limit move, right?
Right, exactly. They were just very strong almost every day coming out of the trade chute. Technically, it's been pretty strong. There was an island bottom on some of the feeder cattle charts, and that lent to a lot of technical buying.
Absolutely. Well, let's review where we finished then on Friday, and that'll be our starting point for today. On live cattle, on our quotes from bar chart, the August contract closed $2.67 higher Friday at $177.17. The other months up about $1.87 or so on the next 3 months. And then you had the feeders that we were talking about. Wow, August up $5.20 Friday at $247.57. That's going to be hard to improve on today, but we'll see if they can do it or not. And then lean hogs wrapped up last week on the heels of the quarterly hogs and pigs report, with the August only 27 higher at 92.60. The defers are actually lower. We'll see what they want to do today. Well, Brian, thanks for helping us lay the groundwork for today's open on a very short trading week, 1 day before the holiday, and then we'll have 3 days after that.